Someone asked, the insurance company went ahead and paid them to wash and paint their fence, and they depreciated it by 90%. And this is non-recoverable depreciation. Was the insurance company proper in depreciating it by 90%, and is there anything they can do? Hey, this is Bendy with My Insurance Claim Expert. So to answer that question, let's go into, first of all, a quick review on what depreciation is. Depreciation is where they remove the percentage of the life of that item that you had. Meaning, let's say the fence life was expected to be 15 years, and they used 10 years of the life of the fence because it's 10 years old, and the insurance company would depreciate it by 66%. Okay, now recoverable versus non-recoverable will depend on the policy. Recoverable meaning if you do the work, the insurance company will then pay you back the amount that they withheld of depreciation. In this case, it's non-recoverable, which means they can never get that depreciation back. So is 90% accurate over there? Well, when we looked over the estimate, I found several areas of concern in the way that estimate was written. Number one, just because, well, the insurance company claims that the fence is 20 years old and that its expected shelf life is 15 years. Just because the insurance company says that it's that old, doesn't make it so. First thing I would do is do a permit search. See when that fence was installed. Maybe it was installed 10 years ago. Maybe it was installed 7 years ago. Maybe it was installed 20 years ago. Second of all, even if it was installed 20 years ago, depreciation is not only based on life. It's basically, what it's really doing is looking at how much life do you have left. Okay, so a fence can be 20 years old, but it could have been well maintained and it may have another 10 years to go. As such, it should be depreciated based on having 10 years remaining, in which case that should be adjusted. Finally, here was the real red flag that it set up. The fence isn't painted in the first place. Okay, so painting, they put it in as a repair method. Okay, meaning here's a way to repair the fence that is functional. And as such, repairs typically are not depreciated. Again, that can vary state by state and policy by policy. In Florida, repairs are not depreciated. So therefore, there should have been no depreciation, not 90%. Finally, here was the biggest factor to me. Well, if the fence wasn't painted beforehand, painting the fence now to cover the damages is not restoring the fence to pre-loss condition. Pre-loss condition was a natural wood look. As such, it may be that the only way to restore this fence to pre-loss condition is by going ahead and replacing the entire fence. So instead of a $3,000 estimate, potentially this is a $15,000 estimate just for the fence damage. So, as always, I always say, don't just take the insurance company's word that this is all that they owe you for, or that the insurance company's adjuster knows what they're doing. They make mistakes too. Always have your policy and your estimate reviewed by somebody knowledgeable in the area. If you'd like to have your questions here, email them to emily@pantherpa.com and we'll get your questions answered. Have a great day.